Ladies and gentlemen, it is finally happening. House prices just dropped at their fastest pace on record. We just got a bunch of new news that proves that the housing market has just made a huge U-turn. And before prices were going through the roof, well now they're going through the floor. So in today's video, I'm going to show you the proof, the facts, and the data that house prices are falling, that inventory is rising, that property sales are falling, mortgage rates are skyrocketing, and home builder sentiment has fallen to new lows. So everyone, this is definitely going to be an action-packed episode, so let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, now first things first, before we get into these huge record-breaking price declines, I got to show you some data to show that the fundamentals in the housing market are shifting, and they're shifting big. Okay, first things first, existing home sales have fallen to a 10-year low in September as mortgage rates soar. And this is no surprise, everyone. I've been warning about how mortgage rates, once they hit 7% or go above 7%, which they're doing now, and I'll get into that in a moment, we're going to see huge amounts of demand taken out of the housing market. And it's just simple economics, we're going to have to see price declines. Mortgage rates are affecting every single aspect of the housing market. Sales of previously owned homes fell 1.5% in September from August to a seasonally adjusted annual rate of just 4.71 million units. So again, people, these are big drops. 1.5% down in a month doesn't sound like a lot, but when you annualize that, this is a huge drop. So let's look to see what home sales are compared to a year ago. That's right, everyone. This marked the 8th straight month of sales declines, and sales were lowered by 23.8% year over year. So it doesn't take much for these 1 or 2% drops to turn into massive drops, people, because also days on market is increasing. Homes did sit on the market slightly longer in September, an average of 19 days, up from 16 days in August. Now you may think, well, this is still pretty hot with only 19 days on market. And yes, what still is low right now, the trend is days are rising. And remember, the trend is your friend. So what I expect to see is every month we're going to see it take longer and longer and longer for people to sell their homes. Now, I just want to reiterate, the housing market in the US, just like any country, isn't just one market. Every state has its own market, every city has its own market, every suburb has its own market. So while I may be making a video here on the US housing market, you, for example, may think, well, house prices are crashing way more in my area, or you may be in an area where prices are still rising. So take this data and go do boots on the ground research to see what's happening in your local market. But what is generally happening around the country is this. Look at this, everyone. Home builder sentiment drops to half of what it was 6 months ago. That is absolutely massive, everybody. The home builder sentiment has crashed 50%. And I don't blame them. It is extremely risky to build a house right now because supply costs and labor costs have skyrocketed so much for these construction companies. A lot of these construction companies have entered in contracts to build these homes at a fixed price, but now we've had record inflation, and so now it is actually more expensive for them to build the home than the contract price is. So what we're seeing is a lot of builders going bust, or they're trying to find a way to get out of the contract. We're seeing people in shock as the builders ask them, hey, we're going to cancel this contract unless you can come up with another $50,000. So what this is causing is a lot of consumers are hesitant to build right now because there's so much uncertainty with supply chain issues, with labor shortages, and with build costs having massive blowouts. The National Association of Home Builders, Wells Fargo Housing Market Index, which is designed to gauge market conditions, fell 8 points to 38 in October from the previous month. So anything under 50 is a contraction, and we have fallen all the way down to 38. And this is the lowest level since 2012. But these two pieces of data are just the first piece to the puzzle. Because what has been the mantra for the past 2 years? Well, inventory is at record lows, and that's why house prices won't fall. This is starting to reverse now, everyone. Look at this. This is housing inventory and active listing count in the United States. Now, yes, while it is still low, we can see here it hit a bottom in February 2020 of 347,000 units, but it's now risen, and the trend is it is rising, and it's more than doubled now. It is now 732,000 units. But it's not only that, monthly supply of new homes in the United States is rising and rising rapidly. We can see here it hit a low in August 2020 of 3.3 months of supply on the market, and then hit a peak of 10.4 months in July 2022, and is still high of 8.1 months of supply of new homes on the market. And we can see here it's getting to similar levels we haven't seen since the 2008 and 2009 market crash. So you're starting to get the picture here, people, that the fundamentals in the housing market is looking very weak indeed. Well, what has this led to? Well, that's right, the fastest price declines or the fastest cooling in the housing market on record. Look at this, home prices cooled at record pace in August according to S&P Case-Shiller. And US home prices fell for second straight month in August, Case-Shiller showed. The S&P CoreLogic Case-Shiller 20 City House Price Index fell 1.3% this August, and this is the second consecutive month decline. So it is happening, everybody. This is not clickbait. The housing market is in big trouble. Prices are falling rapidly, and why again you may think 1.3%, it's not that much. Well, that's up from 0.7% last month and is going to accelerate as mortgage rates get higher and higher, and some people are even tipping that mortgage rates could go over 8%. Home prices are still higher than they were a year ago, but gains are shrinking at the fastest pace on record according to one key metric, as the housing market struggles under sharply higher interest rates. And here's where the data's a bit deceptive, everyone. They're saying, well, don't worry, prices are still up 13% from a year ago. Well, again, they're including the price declines from last year and early this year. So for people that don't understand how the data works, they're thinking, oh, house prices are still going up. Well, no, it is actually falling at record pace. Prices in August were 13% higher nationally compared with August 2021. That's down from 15.6% annual gain in the previous month. The 2.6% difference in those monthly comparisons is the largest in the history of the index, which was launched in 1987, meaning price gains are decelerating at a record pace. So that's right, everybody. Price gains are decelerating faster than what happened in 2007 and 2008. And this housing market crash is going to be different from 2008, but it may be just as severe. The reason why home prices crashed so much in 2008 was, yes, because of speculation, high prices, but it was because of these subprime loans and people getting loans with no income or no assets. Well, now, while the borrowers are more creditworthy, the thing that's going to crash the housing market this time is skyrocketing mortgage rates. Mortgage rates are almost triple what they were at the lows of 2020. So it's just simple economics, simple math. Prices are going to have to keep falling much lower. The West Coast, which includes some of the costliest housing markets, saw the largest monthly declines, with San Francisco down 4.3%, Seattle down 3.9%, and San Diego down 2.8%, falling the most. And this is the reason why here, everyone, mortgage rates on 30-year fixed loan have soared to 7.22%. But the thing is, mortgage rates have been going up so fast, we haven't got the data yet to see how much of an impact this is having on the housing market. Normally it has a lag of about 6 to 12 months before it starts having a real effect. So what I expect to see is the data to get worse and worse from month to month. And just look at this new shocking data to show how much more expensive people's monthly repayments are now compared to a year ago. And this is not being included in the CPI, and it's being very deceptive on how much worse the cost of living crisis is getting. With monthly mortgage payments 75% higher than last year, many first-time buyers are locked out of the housing market, unable to find homes with budgets that have lost $100,000 in purchasing power this year. So did you hear that, everyone? Mortgage repayments are 75% higher than a year ago. This is absolutely crazy. And remember, a home is an essential need, and this is 75% higher in 1 year. And again, this is not being included in the CPI, so in real terms, inflation is much higher. But if home prices are so overvalued, and it's now 75% more expensive for a mortgage, what do you think is going to happen to the housing market? Well, that's right, everyone. We're going to see huge price declines. And I think it wouldn't be out of the realm of possibilities that we'll see price declines of 30 to 40% if, now this is a key if, so don't come back and say, oh, well, Michael, it didn't happen, if the Federal Reserve doesn't pivot and interest rates stay at these levels. If for whatever reason they try to say, well, you know what, inflation's great now, we're all of a sudden going to lower interest rates, they're going to do a turkey and lower interest rates right when inflation's at record highs, yes, house prices won't crash this much. But if they don't do this, it is inevitable. And so what this is forcing people to do is go to adjustable rate mortgages, which again is going to be a complete disaster as people get these low interest rates, but then after whatever the period of the adjustable rate mortgage is, all of a sudden they get a huge spike in their mortgage costs, and this is going to make the crash down the road even worse. Just like what happened in 2008 when people had these jumbo repayments. So everyone, I know what you're thinking, well, okay, what does all this mean for you in simple terms? What this means is, everyone, we're going to continue to see less and less buyers in the housing market, and home sales are going to fall. Housing inventory is going to increase, And if the Federal Reserve keeps hiking interest rates as they plan to do, we could easily see mortgage rates hit 8%. Now, with people's purchasing power falling 30 or 40%, and with mortgage payments up 75%, it is just simple maths again, simple economics. House price is going to have to face a huge correction. So if I was you, I would not be buying right now at all. I'll be waiting on the sidelines, building cash, building savings. At least you can get some interest on your savings now, and waiting, looking in the market with boots on the ground in your area to see when house prices are starting to cool and when house prices are starting to bottom. But everyone, what do you think is going to happen to the housing market? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.